Need to take a technical look at the markets. Ron William, he's a technical analyst at MIG Bank. Ron, I really like your thinking at the moment. Starting off with what's going on in the tech sector. Nasdaq, a 50% recovery from the 2000 crash that we've seen. Are we going to continue with this recovery?
Well, happy holidays from Zurich, Switzerland. And in answer to your question, we most likely will, but when we reach these historical psychological levels, as you mentioned, the Nasdaq technology stock has recovered half of what it lost since the technology crash in the year 2000. This is a very important moment in time, and for that reason we're likely to get some profit-taking, healthy pullback over the next few weeks, and this ties in with a few other intermarket setups which are taking place as we speak.
Ron, a tweeter writes in, he calls himself @Woofy the dog, but don't let that disturb you. He says, everybody loves Apple,
Sure.
Time to leave it for a while. And you've been looking at Apple and whether or not it can continue up on a sustainable path higher.
Well, Apple's a well-known stock that everyone around the world loves. The iPads have just come out, new versions and whatnot. But it's also a very important economic bellwether for the US and just generally for other related industries and markets. The key thing with Apple, we're up at the $600 mark. This has been almost a straight line move, rocketing up into the sky. And there's been various articles talking about Apple going into the $1,000 mark. So a lot of real extreme optimism out there. But the one thing to keep in mind is the acceleration is unsustainable technically in the short-term time frame. So we are more than likely to get some healthy pullback on Apple. And I've just highlighted the long-term 200-day moving average there, just showing that there's over a 30% deviation from the moving average. And in just in terms of year-to-date performance, Apple is up by about 55%. So it's good profits for a lot of people that have been trading this stock, but definitely some potential for mean reversion risk into the moving average, which would be healthy for Apple. But that would also spell a little bit of trouble for the Nasdaq technology sector.
Just before we move on, Ron, I'm feeling a little bit offended here, being Danish, et cetera, et cetera. You have a little bit of explaining to do. What's the Denmark exhaustion signal, which I'm quite sure I read on this chart? If we can just show the chart again. What does that mean? Yeah, see?
Sure. It's a technical indicator developed by a well-known investor trader, Tom DeMark. DeMark is the correct pronunciation, but it basically looks for counter-trend reversal signals in the market. It highlights when momentum in the market has become exhausted. And so that was a signal which I just showed there on Apple. We've had a few overbought signals on Apple, but this is one that is coming at a very interesting time on the stock.
Okay, I'm calming down now again. Very briefly, volatility.
Well, this is the real key to this whole idea of increased volatility over the next few weeks and months. Seasonally speaking, the second quarter of every year, with some exceptions, but most years, every second quarter there is an increase of seasonal volatility. It's just how the markets work, and the famous saying, sell in May and go away, may actually come a little bit earlier this year in April. So that's one thing to keep in mind, just an increase in volatility. But one of the key things to keep in mind is that volatility is at historic lows. One of the key reasons why we're having markets at new highs, especially in the US, is because volatility is so low, and the comfort zone for most investors and traders is very, very good. The volatility is the lowest it's been, I think, since 2007, before the financial crisis. So it's quite interesting times at the moment. One thing that might happen if we do get an increase of volatility over the next few weeks is to keep in mind that this might trigger some profit taking after a great first quarter, and a deleveraging across risk-centric, overcrowded trades.
Ron, have a lovely long weekend. Happy skiing in Switzerland. Ron William, technical analyst from MIG Bank. You can see a little bit of the ski.